Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel @Accounting Buddy NB. In part 3 of our bank reconciliation series, we will understand the complete BRS preparation process when starting with a debit favorable balance as per cash book. We will learn when to add or subtract transactions recorded in the cash book but not in the bank passbook and vice versa. We will also learn how to handle errors and omissions in the cash book and in the bank passbook, plus the effects of overcasting and undercasting on the cash book balance. By the end of this lesson, you will be able to prepare a bank reconciliation statement confidently and understand the logic behind each adjustment. So sit back, relax, and watch the full video till the end. Bank reconciliation statement can be done in below 4 circumstances, starting with the favorable debit balance as per cash book, or it can also start with the credit favorable balance as per bank statement. Now, when the business has availed an overdraft from the bank reconciliation statement can also be done by starting with the unfavorable credit or the overdraft balance as per cash book, or by starting with the unfavorable debit or overdraft balance as per bank passbook. Now let us first discuss and understand when the bank reconciliation statement is started with the balance as per cash book having a debit balance. The entries leading to difference between the balances of the cash book and the bank statement are determined. Each entry of difference is analyzed to determine the effect on the cash book balance, that is, whether it will lead to increase or decrease in the cash book balance. Entries that have led to decrease in the cash book balance are added to the balance as per cash book. Checks issued but not presented for payment, interest credited by bank not recorded in the cash book, direct deposits in the bank not recorded in the cash book are few of the examples of such transactions. Entries that have led to increase in cash balance are deducted from the balance as per cash book. Checks deposited but not credited by bank, bank charges charged by the bank not recorded in the cash book are some of the examples of such entries. Let us learn in detail the bank reconciliation statement process and treatment of various unmatched transactions when bank reconciliation statement is started with the debit favorable balance as per cash book. First, we will talk about transactions recorded in the cash book but not recorded in the bank statement. Remember, we are starting the bank reconciliation statement with the debit cash book balance. Therefore, let us learn about the items of difference which needs to be added to the cash book balance. All the checks issued but not presented for payment will be added to the cash book balance. This transaction decreases the bank balance in the cash book but not the balance as per bank statement. Therefore, to bring the balance of the cash book at par with the balance as per bank statement, this amount will be added back to the cash book balance. For example, as on 31st March 25, balance as per cash book is having a debit balance of $45,000 and the bank statement is having a credit balance of $65,000. The reason of difference in the two balances is a check issued to Tully LLC on 29th of March 25 for $20,000. Now, if we are starting the bank reconciliation statement with a debit balance of $45,000 as per cash book, we will add the check amounting to $20,000 to the cash book balance to arrive at the credit balance of $65,000 as per bank statement. I hope we have understood why we have added $20,000 to the cash book balance, because till 31st March 25 this check is not presented for payment and therefore the bank balance is not reduced by this amount. In this slide we will learn more about bank reconciliation statement when we start with the debit balance of the cash book and the transactions are only recorded in the cash book and not recorded in the bank statement. These items of difference needs to be deducted from the cash book balance. They are checks deposited but not collected or credited by the bank, checks deposited but dishonored, and checks recorded but not deposited. These transactions increase the balance of the cash book but not the balance as per bank statement. Therefore, to bring the balance of the cash book at par with the balance as per bank statement, these amounts will be deducted from the cash book balance. For example, as on 31st March 25, debit balance as per cash book is $75,000 and the credit balance as per bank statement is $50,000. Now, if we start the bank reconciliation statement with $75,000 debit balance as per cash book, we need to reduce the unmatched transactions of the checks deposited but not cleared, checks deposited but dishonored, and the checks recorded but not deposited. Value of all these unmatched transactions will be deducted from the cash book balance to arrive at $50,000 credit balance as per bank statement. In this slide, we will again learn the preparation of bank reconciliation statement when we start with the debit balance of cash book and consider the unmatched transactions which are only recorded in the bank statement but not recorded in the cash book. These items of difference needs to be added to the cash book balance. They are checks or the cash deposited directly in the bank, interest allowed by the bank, interest and the dividend collected by the bank. These transactions increase the bank balance of the cash book but not the cash book balance since they are not recorded in the cash book. Therefore, to bring the balance of the cash book at par with the balance of the bank statement, these amounts are added. For example, as on 31st January 25, debit balance as per cash book is $45,000 and the credit balance as per bank statement is $70,000. Now, if we start the bank reconciliation statement with $45,000 debit balance as per cash book, we need to add the unmatched transactions of check or the cash deposited directly in the bank, interest allowed by the bank, and the interest and the dividend collected by the bank. Value of all these unmatched transactions will be added to the cash book balance to arrive at $70,000 credit balance as per bank statement. In this slide, we will learn the process of bank reconciliation statement when we start with the debit balance of the cash book and unmatched transactions which are recorded only in the bank statement but not recorded in the cash book. These items of difference needs to be deducted from the cash book balance. They are bank charges charged, interest charged by the bank, direct payments by the bank. These transactions decrease the bank balance of the passbook but not the cash book balance since they are not recorded in the cash book. Therefore, to bring the balance of the cash book at par with the balance as per bank statement, these amounts are deducted. For example, as on 31st March 25, debit balance of the cash book is $60,000 and the credit balance of bank statement is $50,000. Now, if we start the bank reconciliation statement with $60,000 debit balance of cash book, we need to deduct bank charges charged by the bank, interest charged by the bank, and the debit payments by the bank. Value of all these unmatched transactions will be deducted from the cash book balance to arrive at the credit balance of $50,000 as per bank statement. In this slide, we will learn the process of bank reconciliation statement when we start with the debit balance of the cash book and the errors are committed in the cash book. This error in the cash book needs to be added to the cash book balance. The error is when the checks are deposited in the bank but are not recorded in the cash book. This transaction is not recorded in the cash book but bank passbook balance has increased. Therefore, to bring the balance of the cash book at par with the balance as per bank passbook, this amount is added. There is another error committed in the cash book which needs to be deducted from the cash book. balance. The error is checks issued but not recorded in the cash book. This transaction is not recorded in the cash book, but bank passbook balance has decreased. Therefore, to bring the balance of the cash book at par with the balance as per passbook, this amount is deducted. In this slide, we will learn the process of bank reconciliation statement when we start with the debit balance of the cash book and the errors are committed in the cash book. This error in the cash book needs to be added to the cash book balance. This means undercasting error in the receipt side and the overcasting error in the payment side of the cash book. Both the errors decrease the balance of the cash book. Therefore, to bring the balance of the cash book at par with the balance as per bank statement, these amounts are added. There is another type of error in the cash book which needs to be deducted from the cash book balance. This means the overcasting error in the receipt side or the undercasting error in the payment side of the cash book. Both these errors increase the balance of the cash book. Therefore, to bring the balance of the cash book at par with the balance as per bank statement, these amounts are deducted. In this slide, we will learn the process of bank reconciliation statement when we start with the debit balance of the cash book and the errors are committed in the bank statement. This error in the bank statement needs to be added to the cash book balance. The error is when wrong credit is given by the bank. This error increases the balance of the bank passbook but not the balance of the cash book. Therefore, to bring the balance of the cash book at par with the balance as per bank statement, this amount is added. There is another error committed in the bank statement which needs to be deducted from the cash book balance. The error is when the wrong debit is given by the bank. This error decreases the balance of the bank passbook but not the balance of the cash book. Therefore, to bring the balance of the cash book at par with the balance as per bank statement, this amount is deducted. Let us now understand the concept of bank reconciliation statement with a real life illustration. On 31st December 25, the cash book of Tully Trading LLC showed a debit balance of $49,000. Bank passbook showed a credit balance of $37,000. Entries in the cash book and the passbook were compared and the following differences were identified. T1 difference is checks of Poly Trading for $15,000 and Raleigh Trading for $9,000 were deposited in the bank but were not collected up to 31st December 25. Now let us understand the effect of this transaction as on 31st December 25. Cash book recorded these transactions and therefore the cash book balance increased by $15,000 and $9,000. While in the bank passbook, since the amount was not collected by the bank passbook value is not increased and hence there is a difference between the balance as per cash book and the balance as per passbook. T2 difference is Dolly Trading LLC, a customer deposited a check of $8,000 directly into the bank. Let us understand the effect of this transaction as on 31st December 25. In the cash book, this transaction is not recorded. Therefore, the cash book balance is not increased. While in bank passbook, the amount is credited and thus the bank passbook balance is increased. T3 difference is bank allowed an interest on the fixed deposit for $500. Let us now understand the effect of this transaction as on 31st December 25. In cash book, this transaction is not recorded. Therefore, the cash book balance is not increased, while in the bank passbook, the amount is credited and thus the bank passbook balance is increased. T4 difference is a check of $10,000 issued to Dona Trading LLC was not presented for payment. Let us understand the effect of this transaction as on 31st December 25. In the cash book, this transaction is recorded. Therefore, the cash book balance is decreased. while in the bank passbook, since the check is not presented with the bank passbook balance is higher. T5 difference is that a bank debit for $6,000 being the insurance premium paid as per standing instructions. Let us understand the effect of this transaction as on 31st December 25. In the cash book, this transaction is not recorded. Therefore, cash book balance is not decreased. While in the bank passbook, the amount is debited and therefore the bank passbook balance is lower. Basis unmatched transactions identified and explained in the previous slides, let us now prepare the bank reconciliation statement as on 31st December 25. In this illustration, we will start with the cash book debit balance of $49,000. Now let us add the unmatched transactions which have increased only the bank statement credit balance and unmatched transactions which have only reduced the debit balance of the cash book. These unmatched transactions in our illustration are: first, checks directly deposited by Dolly Trading LLC not recorded in the cash book for $8,000. Second, the interest allowed by the bank not recorded in the cash book for $500. These two transactions are recorded only in the bank statement and not in the cash book before 31st December 25 and have increased the balance in the bank statement as on 31st December 25. Therefore, $8,000 and $500 are added to the cash book balance to bring the cash book balance at par with the bank passbook balance. The third unmatched transaction is check issued but not yet presented for payment for $10,000. This amount is also added to the cash book balance. Therefore, the total of these three transactions for $18,500 is added to the cash book balance. As our next step in the bank reconciliation statement, let us now deduct the unmatched transactions which have only increased the debit balance of the cash book and the unmatched transactions which have only reduced the credit balance in the bank statement. These transactions are checks deposited but not yet collected amounting to $15,000 and $9,000 and insurance premium paid by the bank but not recorded in the cash book for $6,000. Therefore, the total of these transactions for $30,000 will be deducted from the cash book balance. Now, in the $49,000 debit balance as per cash book, the unmatched transactions of $18,500 are added and unmatched transactions of $30,000 are subtracted. We will get the credit balance as per bank statement for $37,500. This is the process which needs to be followed to prepare the bank reconciliation. From the following transactions, prepare a bank reconciliation statement as on 31st December 25. T6 unmatched transaction is below checks deposited into the bank account on 30th December 25 but were not credited by the bank until 2nd of January 26. These checks are Dolly Trading LLC $25,000, Dona Trading for $30,000 and Domo Trading LLC for $24,000. T7 unmatched transaction is below checks issued on 29th December 25 were presented for payment on 5th of January 26. They are Coley Trading LLC $20,000, Tully Trading LLC $15,000 and Poly Trading LLC $12,000. T8 unmatched transaction is a check for $10,000 received from a customer Doco Trading LLC was recorded in the cash book on 29th December but was deposited in the bank on 2nd of January 26. T9 unmatched transaction is bank passbook shows a credit value of $2,500 for interest and a debit of $200 for bank charges. Balance as per cash book is $200,000 debit balance and the bank statement shows a credit balance of $160,300. Basis above information, We will prepare a bank reconciliation statement in the next slide. Basis unmatched transactions as per previous slide, let us prepare the bank reconciliation statement as on 31st December 25. In this illustration, we will start with the cash book debit balance of $200,000. Now let us add the unmatched transactions which have only reduced the debit balance of the cash book and the unmatched transactions which have only increased the credit balance of the bank statement. These unmatched transactions which will be added to the cash book debit balance in this illustration are checks issued to the three parties as displayed on your screens but not presented for payment amounting to $47,000. Interest credited by bank but not recorded in the cash book has only increased the credit balance of the bank statement. Therefore, this unmatched transaction of $2,500 will also be added to the cash book balance. As a next step in the bank reconciliation statement, let us now deduct the unmatched transactions which have only increased the debit balance of the cash book and the unmatched transactions which have only reduced the credit balance in the bank statement. These transactions are checks deposited but not yet collected. These three checks deposited for $79,000 displayed on your screens will be deducted from the cash book balance. Checks recorded only in the cash book but not deposited in the bank amounting to $10,000 will also be deducted from the cash book balance. Further, bank charges charged by the bank but not recorded in the cash book amounting to $200 will also be added to the cash book balance. Now, if in the $200,000 debit balance as per the cash book, the unmatched transactions of $49,500 are added and unmatched transactions of $89,200 are subtracted, we will get the credit balance as per bank statement for $160,300. That's the process of preparation of bank reconciliation is completed. From the following transactions, prepare the bank reconciliation statement as on 31st December 25 if the debit balance as per cash book is $79,140. T10 unmatched transaction is out of $35,000 checks deposited in the bank on 26th December 25, checks amounting to $15,000 were collected on 2nd of January 26. Let us understand this transaction. On 26th December 25, the cash book balance is increased by $35,000. However, till 31st December 25, checks for only $20,000 were collected by the bank. Therefore, as on 31st December 25, only cash book balance is increased extra by $15,000. T11 unmatched transaction is out of $20,000 checks drawn on 28th December 25, checks amounting to $5,000 was presented for payment on 3rd of January 26. Let us understand this transaction. On 28th December 25, cash book balance is decreased by $20,000. However, till 31st December 25, checks worth $15,000 were presented for payment. Therefore, as on 31st December 25, only cash book balance is decreased extra by $5,000. T12 unmatched transaction is a check of $2,000 entered in cash book on 15th of December 25 but deposited in bank on 4th of January 26. Let us understand this transaction. Cash book balance is increased by $2,000 till 31st December 25 for the checks entered in the cash book on 15th of December 25, whereas it was deposited in the bank on 4th of January 26. Therefore, as on 31st December 25, the bank balance is less by $2,000, whereas the cash book balance is increased by $2,000. T13 unmatched transaction is a check of $1,200 deposited in the bank and collected by the bank on 30th December 25, but omitted to be recorded in the cash book. Let us understand this transaction. For this transaction, the cash book balance will be lowered by $1,200 as on 31st December 25. The checks deposited and collected by the bank on 31st December 25 is not recorded in the cash book till 31st December 25. In continuation to the previous slide, T14 unmatched transaction is a check for $1,050 previously discounted and a discount charge of $50 was charged by the bank, and the same check has been dishonored, but the intimation from the bank was received on 3rd of January 26. Let us understand this transaction. Since the information for the check dishonor is received only on 3rd of January 26 till 31st December 24, cash book balance is shown more by $1,050. T15 unmatched transaction is a check for $20,000 was discounted from the bank and the bank charged $300 as discounting charges. The amount of the check was debited in the bank column of the cash book. Let us understand this transaction. An amount of $19,700 should have been debited in the bank column of the cash book instead of $20,000. Therefore, the cash book balance is shown more by $300. T16 unmatched transaction is a check of $5,000 wrongly credited in the bank passbook on 30th of December 25 was reversed on 2nd of January 26. Let us understand this transaction. Balance in the bank passbook is shown more by $5,000 as on 31st December 25 and was only corrected on 2nd of January 26. T17 unmatched transaction is bank wrongly debited $10,000 on 31st December 25 and reversed it on 3rd of January 26. Let us understand this transaction. Balance in the bank book is shown lesser by $10,000 as on 31st December 25 and was only corrected on 3rd of January 26. T18 unmatched transaction is a check of $400 drawn on the saving account has been shown as drawn from the business account. Let us understand this transaction. The cash book balance is wrongly reduced by $400 as the check is not drawn from the business account. Basis these transactions, we will prepare the bank reconciliation statement in the next slide. Basis unmatched transactions and the understanding of their impact, let us prepare the bank reconciliation statement by starting with the cash book debit balance of $79,140. Let us first consider all the unmatched transactions which needs to be added to the cash book debit balance. Only those unmatched transactions will be added which have increased the bank statement credit balance and which have reduced the cash book debit balance. T11 unmatched transaction is check issued on 28th December 25 but not presented for payment. Therefore, $5,000 will be added. T13 unmatched transaction is a check deposited into the bank but not recorded in the cash book for $1,200 will be added to the cash book debit balance. T16 unmatched transaction is check wrongly credited by bank. Therefore, $5,000 will be added to the cash book debit balance. T18 unmatched transaction is check drawn on saving account wrongly credited in the cash book for $400 will also be added to the cash book debit balance. The total of all these four unmatched transactions amounting to $11,600 will be added to the cash book debit balance. Now let us consider the unmatched transactions which needs to be deducted. Only those unmatched transactions will be deducted which have reduced the bank statement credit balance and those unmatched transactions which have increased the cash book debit balance. T10 unmatched transaction is checks deposited on 26th December 25 but still not credited till 31st December 25 amounting to $15,000 will be deducted. T12 unmatched transaction is a check entered in the cash book not yet banked for $2,000 will be deducted from the cash book debit balance. T14 unmatched transaction is discounted check dishonored but not entered in the cash book for $1,050 will also be deducted. T15 unmatched transaction is discounting charges not recorded in the cash book for $300 will also be deducted from the cash book debit balance. T17 unmatched transaction of an amount wrongly debited by the bank for $10,000 will be deducted from the cash debit balance. Therefore, the total of all these 5 transactions amounting to $28,350 will be deducted from the debit balance of the cash book. Now, if from $79,140 the debit balance of the cash book $11,600 is added and $28,350 is deducted, we are left with the bank statement credit balance of $62,390. Thus, the process of bank reconciliation for this illustration is completed. Let us work on another illustration. Bank reconciliation statement is prepared as on 31st March 25, starting with a debit balance as per cash book. State whether the following transactions will be shown in the bank reconciliation statement by adding or subtracting from the given balance and also give the reasons. T17 unmatched transaction is bank had wrongly credited the amount of $1,600 on 1st of March 25 and was reversed on 3rd of April 25. If we analyze this transaction, $1,600 will be added to the cash book balance since it is not recorded in the cash book. By adding the amount, cash book balance will increase and will be at par with the bank passbook balance. T18 unmatched transaction is receipt side of the cash book was overcast by $15,000. Let us analyze this transaction. $15,000 will be deducted from the cash book balance since the cash book balance is erroneously increased by $15,000. T19 unmatched transaction is payment side of the cash book was overcast by $5,000. If we analyze this transaction, $5,000 will be added to the cash book balance since the cash book balance is erroneously decreased by $5,000. T20 unmatched transaction is receipt side of the cash book was undercast by $7,000. If we analyze this transaction, $7,000 will be added to the cash book balance since the cash book balance is erroneously decreased by $7,000. T21 unmatched transaction is payment side of the cash book was undercast by $4,000. If we analyze this transaction, $4,000 will be deducted from the cash book balance since the cash book balance is erroneously increased by $4,000. T22 unmatched transaction is check for $9,000 was issued but not recorded in the cash book. If we analyze this transaction, $9,000 will be deducted from the cash book balance because if the transaction was recorded, it would have shown the balance in the cash book at a lower amount. State any 5 reasons when the balance as per cash book will be higher than the balance as per bank passbook. Reason number 1 is checks deposited but not collected by the bank. Reason 2 is the checks recorded in the cash book but not deposited in the bank. Number 3 is the interest debited by the bank but not recorded in the cash book. Number 4 is the bank charges debited by the bank but not recorded in the cash book. And number 5 is payments made by the bank as per standing instructions but not recorded in the cash book. Let us take another illustration. State any 4 reasons when balance as per cash book will be lower than the balance as per bank passbook. Reason number 1 is the checks issued but not presented for payment. Number 2 is checks deposited but not recorded in the cash book. Reason number 3 is wrong credits given by the bank. And reason number 4 is the interest credited by the bank but not recorded in the cash book. Next week on 18th October, we will explore the BRS process when starting with credit favorable balance as per bank passbook. We will also cover the treatment of errors and omissions in both cash book and bank book and the impact of overcasting and undercasting of receipts and payments, followed by real life illustrations. If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @accounting buddy.